The coronavirus pandemic has impacted families' finances and how they invest their money. With many still concerned about what the future looks like, what can you do to help ensure your family is set up for financial success? Avni Lal has more with Harry Abramson, the president and CEO of Abramson Financial Group.
How has the pandemic changed the landscape of financial planning?
Yeah, well, we have the whole year of 2021 under our belt, so it's important to use that as a gauge. I think from a financial planning standpoint, it's important for people to make sure they have proper liquidity, make sure that they're looking at their current income, and maybe be a little bit proactive in their approach in terms of how they're looking at what they're doing with their finances. Again, we don't know what to expect this year, but we want to make sure that if something does happen, that you're positioned in a way where it won't be something that's going to be harmful for your long-term strategy.
What habits and psychological behaviors should be adopted this year when it comes to financial planning?
It's important to make sure you develop good habits, not only in the short term, but in the long term. And I find a lot of times when people are starting off the year, they're motivated, they want to put some money away, they want to make sure they're doing the right thing. But it's also important to look at what's happened. You want to make sure you're looking at things on a monthly basis, every 6 months, look at any new potential tax law changes that might be happening. When you're saving money on an annual basis, a lot of times you want to use the number of 15% of gross earnings to be saved. And the reason why is that if you save 15% of gross earnings on an annual basis, it's going to help you combat the wealth eroding factors that are out there: taxes, inflation, planned obsolescence, technological change. And depending on where you are in the planning, whether you are, maybe a few years away from retirement or you have many years to retirement, putting that 15% away will help you in the future so that when these other factors do play a role, they're not having a negative impact on your overall lifestyle that you want for the future.
Speaking of inflation, which continues to be a key concern in 2022, how should we plan for this?
Well, you want to make sure that wherever you're investing your money, if it's, say, in cash, where a lot of people like to have their money in cash, unfortunately, that inflation is eroding that dollar. So although the money is actually there, you're losing money. You want to look at maybe index products, maybe look at ways to diversify your portfolios to kind of keep up with inflation. Also, if you now are entering into retirement, you want to make sure that you're looking at safe products and strategies so that you're not eroding that dollar in case there is any kind of market correction.
And finally, share advice for those young investors, right? We're seeing Generation Z trying to go, buy houses, and they're coming into the stock market for the first time. Can you share some advice for that generation?
Absolutely. So it's important, especially if you're going to be thinking about buying real estate, or if you're doing any kind of planning. I know a lot of times people get very eager. They start a job, they want to put money away into a 401k. Maybe they might even have some debt. So you really want to weigh up, do you want to put the money maybe into that 401k just yet? I know there might be a match. Or do you want to just put that money aside so that if you do want to buy a home, you can? You can always go into any retirement investing later on, but you want to be a little bit proactive in your approach with how much tax are you paying today versus how much tax will you pay in the future. And if you do want to do things in the short term, like buy real estate or get involved with other things, you just want to weigh up. Maybe you might want to lower that contribution into that 401k plan so that maybe you can buy that house.
Okay. We're going to leave it there. Thank you for joining us today.
And that's our show for today. I'm Bert Sempier. Stay tuned for more news. We'll be back for more WMBC News Daybreak tomorrow at 11:30. Enjoy the rest of your day.